In today's world, we all know that profits are to be made at the margins, but you need about a crystal ball, not only to ensure that you are positioned to capitalize on opportunities, but just sometimes to just stay afloat. Now, TreasuryONE's latest offering, I think, is as close to a crystal ball as you're going to get. It's their cash analytics tool. It's powered by AI. Great example that AI is not only being used to create cat memes and Renaissance settings and writing children's speeches. The cash analytics is a cash flow forecasting tool. And when you guys showed me the demo the other day, it was more like a Swiss Army knife with all its functions. So to chat about TreasuryONE's latest tech offering, I'm joined by Pieter Cronje. He's the Director and Head of Cash Liquidity and Forecasting, as well as Tim Ramlugan. He is the Manager of the Cash Liquidity and Forecasting Department. Gentlemen, thank you very much. And to everyone else for joining us for this webinar this morning. Pieter, I'm going to start with you. When I think cash flow, I think of this cumbersome process, a lot of places for human error to be able to creep in. Are that some of the reasons that you guys decided to pursue AI as a cash flow technology?
Thanks, Ilse-Marie. And you're hitting the nail on the head, right? I think when it comes to cash flow forecasting, especially in today's age, we're all accustomed with Excel and numerous templates flying around and having to do manual consolidations. So it's quite a time-consuming process, and it's prone to error, right? If you think of the number of line items and just the data and information that goes into it, we're all human, and you're bound to make a mistake here or there. I actually wanted just to take us back a few years when we, head out and we said we needed a dedicated cash flow forecasting tool. Because we were also at TreasuryONE as a business, we've been providing cash flow forecasting as a service for at least the past 10 years. And we were doing it on the exact same basis as everybody else is doing it currently. Manual templates, consolidating information, providing reports thereafter. And it was just becoming unsustainable. The team was spending hours and hours on end just to consolidate and collate information. And it took away the time from actually analyzing it and applying yourself to get the real value out of the forecast. So we set off and we came across Cash Analytics, which is a dedicated forecasting tool that's cloud-based. Tim will take us through the demo shortly. But what it allowed us at the start was to basically replace the Excel process from its entirety, right? So start to finish, employees across different business units are able to input information. It does automatic consolidation. You've got different hierarchies that you can set up from a reporting perspective. But it also allowed us to do quite dynamic forecast versus forecast and forecast versus actual analysis, which is where we wanted to end up with at the end of the day. But since then, the tool has evolved. So the past year and a half, we've been actively using it. And that's where your comments about AI and where it's taken it to the next level has come in, is where we use actual bank statements, which we were using historically as part of your forecast versus actual analysis. But the tool can now analyze your bank statements and pick up your business trends and apply, those changes to your forecast. So the goal where we're ending up these days is to get to a forecast which is pre-populated and automated forecast that gets you to a more accurate starting point. And that's what we've been experiencing and rolling out to clients over the past few months, at least.
Mm-hmm. So when we look at the demo later, you're going to see it all looks very pretty on screen. And you guys have started rolling it out to some of your clients. Have you been able to translate what we see on screen into actual real world improvements? Has it made a difference somewhere?
Yeah, definitely. I think what you're going to see on screen is quite I think the nice thing about the tool is that it's very easy to understand and to follow. That will be evident. But the biggest thing that we've seen, especially just from replacing your Excel process, right? So if we think about, before we get to the AI component and the machine learning, but just replacing the Excel process, everybody using one point of entry, it's one tool, it's one consolidation. And even there, we've had clients save time. So we've saved up to 70% of the time that you'll generally spend on your forecasting process. So that's already a significant saving. And then also it allows you to, accuracy improves over time as well, because you've got access to, that forecast versus forecast and that forecast versus actual analysis, which everybody in the organization's got access to, from that side. So instead of you just collating the information, sending it off to the financial manager to approve, and then somebody at the end of the month sends you a report to say, guys, we got this line item wrong, explain the variance. That can all be done before, it's even approved and it goes up the chain to be consolidated. So it's empowered the individuals to also ensure that the information they're supplying and reviewing is correct and at the best level that can be.
Tim, just before we get to you, you mentioned Excel now, Peter. There's this super glue marriage between financial planners and Excel, right? That's their preferred method of choice. How did you guys work with that? Is there a steep learning curve? Is the tool user friendly like we would expect to see with Excel if someone's used to that?
Yeah, it definitely is. I think the nice thing, and we'll definitely see it when Tim opens up the portal for us. But it's Excel based in the sense that, there's rows and columns, and you set up your template, basically mimicking your Excel template, or we improve on that as well with different additional line items, and we can extend the period that you're forecasting on as well. But a normal credit controller or credit clerk that needs to input information will be more than comfortable to, access the tool and use it. It's extremely easy. They kept it, they follow the mantra of keep it simple, stupid, which we like as well, because then it just opens up the world for everybody to use it and actively get the most out of it.
Okay, for some of us that doesn't necessarily find it as simple, if anyone has questions, please make sure to leave them in the comment, and towards the end of the demo, we will make sure to get back to all the questions. Tim, you can open the portal. Practically speaking, when a company wants to start using the cash analytics tool, where do they start? Because from the sounds of it, there's going to have to be a lot of strands, surely, that needs to kind of be plugged in before it can work efficiently, right?
Yeah, I think I'll answer this before I hand over to Tim to take us through the demo. It basically starts off, as I said, where we can replace the current Excel process, in essence, where we'll go in, understand the client's forecasting process and their requirements. Then we'll discuss the template, which Tim will take us through, just to see if there are some changes that we need to make in order to align to cash analytics, so that you get the best out of it from a reporting perspective and the analysis that comes afterwards. But in essence, getting the guys going is fairly quick and easy. Once we've got an understanding of their current process, the template, the structure from an organizational and a reporting perspective, the team gets you going within 6 weeks. And that 6 weeks will include, training, setup, and rolling out to different business units. So it's quite a quick process. Fortunately, from a technology perspective, it's completely cloud-based. So you'll get a username and a password. Guys can log in from anywhere globally and access the tool. So there's no massive effort from IT, to really get it going in your organization. So it's quick and easy. And then the real benefit comes afterwards. Once we've got visibility, bank statements pulling through automatically, then we can start to utilize the trend and get going on that as well. Good.
Tim, you can take us through some of the overviews of what the tool can do, what it looks like, where it's going.
Okay, sure. Thanks, Ilse Marie. Thank you, Peter. So Cash Analytics, as you can see, is quite a very simple interface to use. So what you see when you log into your portal is a view of all of your historical cash flow forecast submissions, as well as your current cash flow forecast submissions and what the status is of your forecast submissions. So when Peter mentioned the moving back and forth of emails and various submissions, right now you can track everything as the status on one screen and see when last it was modified and who made the changes to that template. So in terms of controlling your cash flow forecast submissions for a large organization, it's all done on this dashboard interface. So diving into the cash flow templates, you have the ability to forecast in multiple different currencies. In this instance, you can have a ZAR forecast and a USD forecast. So fortunately, we import the exchange rates for you, so you'll know that your forecast exchange rates are always up to date, and it will do the respective consolidations for you when the exchange rates are in the system. So going into the cash flow forecasting template, as we mentioned earlier, it has the same look and feel as Excel in the sense that there are your rows and your columns and cells that you can click on. So high level view of the template, you'll see that we have multiple groups that are available to be populated. So these groups are just the general forecasting line items that a business would need in their day-to-day operations, such as your receipts, your payments, and intercompany transactions. So touching on the intercompany transactions, Cash Analytics has a module built in which allows an intercompany to create an equal and opposite flow with the corresponding entity. So it's another time-saving component of the portal that makes sure that your intercompanies are always in balance no matter what the currency is. When it comes down to the line items are completely customizable according to your current cash flow forecasting template or through one that we customize for you based on your reporting needs. So all of these line items can be expanded and contracted. And because we are receiving those MT940 electronic bank statements, you have the ability to granularly forecast per creditor or per debtor based on the bank statement reference that you are using, or you can do a blanket-wide cash flow forecast based on your creditors. So it is extremely customizable and user-friendly, and when doing an exercise like this in Excel takes hours or days to create a template like this. But using a tool, you set it up once and you train your bank statement mapping, and after that point, the system will do all of the heavy lifting for you. So as you can see on the screen that I'm on now, these are your actuals. So what's happening in this instance is the electronic bank statements are feeding into Cash Analytics via MT940 host to host or an SFTP connection. And we pick them up every day, review them, make sure that they're in the system, and also ensure that all of the transactions are accurately mapped. And as an example of the mapping, you'll see that if we have to go into a cell and you'd like to see the breakdown of your sales on this day, it will show you exactly what's happening on each bank account, as well as the value of the transaction and the transaction date. And it goes further into which entity it is, which current and which account it is. So going into the actual cash flow forecast, it does retain the Excel user friendliness where you can enter an amount in a cell. This amount can then be dragged and you can use basic Excel functionality. I know one of the things that people do on Excel cash flow forecasting is creating subtotals and totals for all of their rows. But luckily on Cash Analytics, it's automatically done based on what you're populating. So when it comes to the automation, AI, and machine learning component of Cash Analytics, this is where we start understanding the bank statements and we pre-populate a forecast for you based on all of the bank statements that have happened on a line item. So as an example, if we look at your debtor receipts, we can run a simple trend forecast for you, which will now look at a specific period in time that you'd like this trend forecast run for. So in this example, we can just use the last year's worth of data. And it's now mapping all of your transactions that have been allocated to that debtor receipt line item in a forecast view where you can see exactly what your forecast is going to look like based on historical transactions that have taken place. And once you save this, your forecast is now pre-populated with what's taken place in the past. And I think this is definitely one of the time-saving components that Cash Analytics offers, as well as it helps increase the accuracy of your forecast because you don't need to do any manual calculations of what's happening in your business. It's all done for you based on understanding the underlying data.
But I also just want to chip in there, right?
Yes.
So the added benefit of receiving the statement on a daily basis is that the trend in the background is continuously learning and picking up as your business cycle and your trend is changing. And based off of that, it's continuously adjusting, the forecast for you. So whenever the team, whether you're doing a weekly, a monthly, forecast, each time we run the trend, it will pick up the new statements that it's received and make those adjustments, going forward as well. And just in terms of accuracy, we ran this for one of our other clients just last week, where we still at the phase we're running a proof of concept. So we set everything up. The team goes through all of the detail, mapping the transactions, and then also running the trend. And we got off of a variance on their closing balance. We closed off at 1.2% off of the actual closing bank balance without any intervention from the client, by just using statements and the system picking up the trend. So it's extremely accurate straight off of the bat. And the idea behind it is to say, once we've given our clients this baseline forecast, which is based off of the trend, the teams go into it, review the information and make adjustments, especially on those once-off transactions, and where they know that things are a bit out of sync this year. We're not paying on a Wednesday, we might be paying next week Tuesday, for argument's sake. Those sort of adjustments they'll need to make as well.
Yes. Okay. So Peter mentioned earlier in the conversation as well about the forecasting period that you can use. So Excel generally limits you to your forecasting horizon, whereas a tool like Cash Analytics, you can predefine your horizon as well as the time buckets that you'd like to forecast in. So in this example, you can see that we're currently forecasting daily, but as you go into the future, it will now change to monthly buckets where you have a view all the way up until the middle of next year. And this is all generated via using your electronic bank statements and the trend forecast. So immediately, if you would like to see on a high level what your quarter-on-quarter forecast is looking like, or a month-on-month forecast, or where you predicted to land at the end of next year, based on all of your financial data that you have up until this point in time, it's as simple as clicking a button and all the information is readily available to you without having to get various teams to estimate and guess and populate a forecast. It's all backed by the underlying data that's in the Cash Analytics portal at the moment. And another function of Cash Analytics is that everything can be visually represented at a click of a button. So once you're in your forecast and you want to just make sure that your cycle is all right, and you want to identify any spikes or troughs in your cash flow forecast, it can be done visually at the click of a button. Moving into the biggest time-saving component of Cash Analytics is the reporting functionality. So before I dive into the reporting functionality, I'd just like to give you an overview of the organizational hierarchy, which shows you the different complexities that people experience when populating a cash flow forecast. Is that you'll have your parent group, and underneath that you may have subgroups that own subsequent entities as well. So on Cash Analytics, luckily we can use our organizational chart like this. It's a drag and drop exercise to move businesses into different silos, to add on different businesses. That eliminates the need for you to do complex formulas in Excel and to build additional models. It's all taken into account on your organizational chart. And moving on from the organizational chart into your reporting functionality, if you do need to run a consolidation report, like I'm about to do now, your first selection criteria that you have is to consolidate via business unit or group. So depending on the level of analysis that you are performing, you can either drill down into each specific entity, which is then grouped by their line items, or you can look at an overall group of your holding company as well as the different sub-entities underneath there. So doing an analysis based on what's going on in your cash flow forecast is simply clicking a button instead of rebuilding an Excel model.
Just Tim, before you continue, for everyone that's been joining us, please make sure that you can ask your questions in the comments section, and we will get to them as soon as the demo is done. Thanks, Tim. You can continue.
Okay, no problem. All right, so Cash Analytics has a very simple interface when it comes to integrating with your data and just understanding what you're looking at. So a high-level view of that will show you which submission you'd like to forecast and or like to run a consolidation for. And the benefit of forecasting on a cloud-based tool is that you have access to all of your historical forecasts that have taken place. So if at any point in time you need to see what you were forecasting this time last year, all of that information will be available to you on the portal, and you can measure it against your forecast or your actuals that have taken place. Into the currency section, we know that we transact in South Africa with multiple different importers and exporters. So Cash Analytics facilitates your currencies for your receipts and payments, as well as the conversion and the latest rates that we will import on your behalf. Going into the consolidation report, you'll see that it's a click of a button, it takes about a second, and now you have a full view of your complete consolidation of your whole entity. And I'll start on an extremely high level view to show you your opening balances, as well as receipts, payments, net movements. And if we have to go interrogate this 1.1 billion rand forecast that's coming in, it's as simple as drilling down on your receipts and identifying which business unit is driving this. And you can go down into the granularity of the line item. And I just want to touch on the point that each entity is not confined to using the exact same set of line items when it comes to a consolidation report. So you'll see in entity 5, they've got sales as their receipts line items. But if we go into entity 1, they have all of their various line items. So Cash Analytics is smart in the sense that it will combine all of your receipts and payments. So as a CFO or a financial director, you can very easily have a high level view of where the business is going. But down to the people that are populating the cash flow forecast, they have the ability to go down to the granular detail of what's driving the cash flow forecast. And when it comes to an analysis factor, everybody has access to use the functionality of going down into the granular detail and seeing what's driving the flows on the cash flow forecast. And another benefit of the consolidation report on Cash Analytics is that it can be aggregated to different time periods. So whether you'd like to see it daily, weekly, monthly, or quarterly, it's as simple as clicking a button, rerunning your report, and it will now change the view of your forecast to have your daily bucket, so you can identify any flows that you need to address in your cash flow forecasting cycle. And once again, everything can be visually represented. So if you do need to have a snapshot of what's going on in your business and where you're going to be needing to go into debt, or you have surplus cash to invest, it can be done using the tool, and it will give you an indication of your cash flows in the future. All right, on to the second report, and I think this is where the accuracy of cash flow forecasting is measured, is the comparison report. So your comparison report allows you to compare a submission to either your actuals or to any of your previous forecast submissions. So you have the ability on the tool to look at how well your forecasting is going compared to your previous forecasts and any significant moves that may have taken place, or you can compare it to the flows that are going through your bank account to measure your accuracy of your cash flow forecasting. Once again, all of the selection criteria on Cash Analytics is uniform, and running the report is also as simple as clicking a button. And you'll see that on this variance report right now, I'll go into a high level view again, you'll have your Rand values of your forecasted flows, and then your actual flows, and then a variance factor as well. And this variance can either be shown as a percentage or rands. You'll notice that in the top right-hand corner of this actual cell, there's a red triangle. And the red triangle indicates that there was a comment made by an inputter on the cash flow forecast submission that gives you an explanation to one of your flows that have taken place. So in this example, you'll see that your actual sales are substantially higher than your cash flow forecast by 42%. And if you're doing an analysis to see what's driving that, if a comment has been entered into one of these cells, you can go down into it to see that there was a month-end sales promotion that resulted in higher than usual actuals that the forecast didn't take into account. So it allows very quick analysis and very quick decision making, as well as understanding the cash flows if all of the inputs are captured correctly into the portal. And once again, this can be either shown very high level as a monthly variance report, or you can go down into the granular detail of daily, weekly, monthly, or quarterly, and it will retain the same formatting and flow of information, as well as the conditional formatting that has been applied. So you'll notice that some of the cells are green and some are in red. So Cash Analytics will take into account any positive or negative variances that take place on your payments, your receipt side, and will point it out using conditional formatting that can be adjusted by you at any point in time. And if further analysis is needed on this cash flow forecast submission, it can all be downloaded either into Excel or PDF. And also as simple as clicking a button and you'll see that my comparison report is downloaded.
Oh,
right. I think from the demo perspective, that's my story.
All about saving time, right? Okay, so we do have a couple of questions. One came in from, how do you guys handle data privacy and security, especially given the sensitive nature of the financial information that you guys are handling? Peter, I don't know if you would like to jump into that one.
Yeah, I'll take that one, Ilse Marie. So fortunately, Cash Analytics is it's hosted in the Azure cloud, by the guys team in Ireland, and they've got data centers in the US as well. But it's completely ISO and SOC 2 compliant, and the guys are running all of those security checks on an annual basis. So it's completely secure. I think an added security step that we sometimes forget about is as you onboard users as well. So each user will have specific user rights and access rights to their information. So Tim will have viewing rights of his entity, and Peter can see everything for argument's sake. So you can, predefine who's able to see what, and then, also get down to that level, as well as also capture and approving access, and all of that can also be defined. But just basically from a data privacy and security perspective, we tick all of the right boxes, as I said, by being ISO and SOC 2 compliant with that as well.
Tim, this one could possibly come to you. Can Cash Analytics forecast VAT refund or payment by looking at sale forecast and vendor payments forecast?
Yes, it can. So Cash Analytics has a lot of smart formulas in the background as well. So you can apply a formula to a cell that will run a calculation of your VAT refunds or payments based on the sales that were made and payments that have been received. You do have the ability to run special line items underneath your cash flow forecast where you can analyze various scenarios using your percentage refund rate or percentage payment rate. So that can be incorporated into your cash flow forecast. But one thing that we have picked up is that using the trend forecast and getting your sales figure in there, the trend is also picking up your VAT repayments, tax repayments, salary increases, and bonuses. So it's taking that into account as time goes on. So the tool is understanding your data, and it's already predicting that on specific dates you need to have a VAT payment, or you are due a VAT refund based on what's happened in the previous business cycles that have taken place.
Well, I don't see any further questions coming in. Peter, last thoughts from you on your guys' Cash Analytics tool.
Thanks, Ilse Marie. I think to summarize everything and how we're positioning it and seeing it going forward as well, is that the goal is to give clients, I see Kyle just popped up with a question.
There's one question that came in. I must quickly go through it before you continue.
Yeah, I think let's pick that up and then we can.
Carl asks, how does actual receipts match against forecast? Assume historic allocation on bank references. And secondly, can you do long-term budgeted cash flows? In this instance, do you load your new financial year budget into the system?
Yeah. Tim, do you want to take it?
Yes, I'll take this one. So, Kyle, your actual receipts match against your forecast by using mapping rules. So in the back end of Cash Analytics, we'll receive those bank statements, and based on the bank statement reference, we'll allocate that transaction, with your business knowledge to a specific line item. So when you are running a forecast versus actual report, you're going to be looking at your forecasted line item versus all of the actuals that have been mapped to that specific line item. And then your second question, so your long-term budgeted cash flows. So Cash Analytics also has the functionality to convert a budget to a forecast. So you can input your next year's budget into Cash Analytics, as well as the payment and receipt terms for each of your budgeted line items. And then Cash Analytics will pre-populate the forecast for you based on those budgeted flows. And the budgeted flows can also be adjusted up and down with different percentages at different points in time. And another thing that Cash Analytics can do is it can also overlay the trend forecast on your budget. So if you'd like to see your budget for 6 months and then a trend forecast for the future 6 months, if your budget isn't going all the way up until that point, it is possible. And if you would like to see a 3 or 4 year cash flow forecast as well, the trend will work off all of the historic data and the budget in there and then forecast for you going forward. So yeah, I hope that answers your question, Carl.
Also, one last question, and it's always a key one when you have these kind of programs running in your business. What kind of support will TreasuryONE be providing? Is there ongoing support when you have this type of software so glitches can be sorted quickly?
Yeah, Ilse Marie, so we're selling, a cash flow forecasting as a service solution. So that entails, the use of Cash Analytics, but as well as the support from Tim and the rest of his team to make sure that, on a daily and a monthly basis that, actuals from bank statements are imported, the users are trained, and if there's any funny queries that pop up, they're welcome to reach out to the team. So effectively, we become an extension of your finance team from a forecasting perspective. And we also ensure that as soon as, we're constantly engaging with Cash Analytics as well from a product development perspective. So whenever there's something new or items that we pick up that we want to incorporate into the tool, we engage directly with them and we roll that out to our clients first as part of our agreement with the guys. So it's hands-on support throughout the entire period. So it's not just technology we're selling. We're selling a complete service and a solution.
Peter, I interrupted you earlier on, but any last thoughts on the Cash Analytics tool?
Yeah, I think it's to my point earlier, and we're selling a solution, and I think especially in today's age where everybody's got limited time to get information out, and everybody wants more detailed, accurate information on a timely basis. This is what we're trying to solve, right? Is to get clients to a very accurate baseline forecast. From where the users can incorporate their institutional knowledge and make adjustments to it to improve the accuracy further. But as I said in my example earlier, by just running the trend forecast, getting to a 1.2% variance without any external intervention is already, mind-boggling. So the tool's capability it speaks for itself. But it also provides that insight that finance leaders want, and it allows you to make those on-the-fly decisions a lot quicker as well. So we're quite excited about where forecasting is heading, and especially to the point that we, saving people time and improving accuracy along the way. So from that side.
That's it. Thank you very much, Peter and Tim, and for everyone else joining us. It is the latest Cash Analytics tool. It's a great service, time-saving, accuracy, all the benefits that AI brings. So if you want access to the game-changing crystal ball, make sure to contact TreasuryONE directly. Thank you very much, gentlemen.
Right. Thank you, everybody.
Perfect. Thank you.